Happy 2025. Happy New Year. How's everyone doing? Mike works. Got a little groove coming on. Little JB in the house. Yeah, interesting morning indeed, huh? I've been watching this APP kind of all morning. I like this overall chart on the 195, and it's just been coming all the way down into this resistance. This support area, and it looks like it's taking a nice bounce. So we'll see what it wants to do. I'm playing a little cautious here. I'm not in this yet, but I'm maybe looking for a bit of a bounce, or sorry, a little bit of a pullback back down, maybe into this point of control. So we've sort of formed an inverted head and shoulders here, and maybe a good pickup spot right there. But I kind of want the market to settle just a touch before I jump into that. But we're down here on areas where some names do look good. We've done some gap closing on the SPY and the Q, a little bit more than would be the original gap closes from 2 days ago from the weekend have closed, and we've taken a nice bounce. But I just kind of want to wait and see what the market has in store. We have bond auction today, right? And Trump is speaking. I don't know if he's already speaking or not. Not quite sure. I was just making some coffee before coming on, so I wasn't watching it closely. But on APP, you can see we've got this consolidation pattern that's been developing, and we have our value area high and a value area low and a couple of key levels within that. But when we were talking about it yesterday with Nate, it had broken up out of this value area high, right? And it had pulled back into that area that it broke through. So old resistance becomes support, and it looked like it kind of wanted to bounce, but then that, of course, failed today with the market pull. And usually, when you get a break, kind of a false breakout or a false breakdown, you get a pretty decent sized move within the pattern. And that's exactly what we got today, all the way down into that support level. That's true, John. That's true. That's funny. He's speaking now? Okay. So it'd be interesting to watch just sort of how the market reacts, and see. So for those of you that were trading during his first administration, you'll know that the market could make a pretty violent move one way or the other, just based on a tweet or a comment from a press conference. So I'm interested to see if that happens again during this second administration. So, or second term. I guess it's also a second administration, but the second term. And most of the names I was kind of looking at to come on the mic and talk about have broken just a little bit. Apple was holding up nicely today, but it's not in the tank or anything, but it's pulled back a little bit. One name that I like here is Deck. Deck here on the daily. I kind of like this chart, especially with earnings coming up in 10 days, or a little bit more than that. Sorry, 20 days. Yeah, it's on the 30th. So this chart looks really nice. It's come down into the 21 here. It's in a squeeze. It's rounding on the 195, but it's in more of a low compression squeeze. But we got a nice pullback today, so I might be looking to set up a trade on that. I'm definitely watching APP. That's one of my favorites at the moment. And I thought we could kind of dig around and see if we can find something something interesting to set up a trade plan on. Does that sound like something everybody would like to do? Now that we've gotten a pullback, we might find some nice entry spots. All right, so let's pull up Sam. And later this week, I think I'm probably shooting for Thursday. I'm going to do a lesson on theta and theta decay, especially how it applies to 0 DTE options. Captain Scoot. That's a good question. What time frame do you give the most weight to when using VP? It's kind of a combination of a few of them. So what will happen is, let's take this APP for instance, right? When we're looking at this on like let's put it on a 195, right? And we see that we have, let me get rid of those. We see that we have a pattern that we like. We see that, this is our sort of standard woodpecker TPS type pattern, right? Consolidating. I always like to put the little I there. But I start on the larger time frame because what I want to see is there kind of a clear block of volume that is creating, or this trading here is creating this block, right? And I want to know, what else I need to worry about. Is there a big chunk of VP above it, up here, let's say, that if this were to break out, is probably going to find some level of resistance. And then, is there a clear value area low and value area high to trade against? And then what sort of VP is further below? So if this were to break down, could we maybe see a bounce somewhere? And then what I want to see is, so for this one in particular, the big VP is, this plays in a little bit too, right? This area here and this area here, which is creating this consolidation, right? And we have a very clear VP level high and low, but on the 195, we don't get a tremendous amount of detail. You can kind of see a couple of little pieces that stick out a little further, which are going to act as, what I kind of call intermediary POCs, which are going to act as support and resistance. But what we want to do is look at it in greater detail. But we know that we want to look at this pattern from, what is that, the 18th to today, right? Because this is a visible range volume profile. So I'm going to go down in time frame, like go to a 5-minute, and then I'm going to zoom it so that I can see the part of the pattern that I'm interested in. Okay, so this is a 5-minute chart, and because this is so many days, I might move it to a 10 so I can see more candles, but see the pattern, right? Okay, so now I'm going to be able to draw a value area high level, and you'll see when I put on my lines. Well, that's weird. Oh, there we go. my lines did something weird. My yellows are my value area high, value area low. And then the reds are sort of these, the true point of control is this lower line, right? But these other lines are, I'm sorry, it's actually the upper line now that it zoomed out a little bit. they're also going to act as, support and resistance levels within the pattern, right? And so once I feel like I've gotten those pretty clear, then I just kind of need to look at where we are, right? And then that just becomes a preference. You can look at that on a 5-minute chart. If it's a little smaller of a time frame, you can look at it on a 1-minute chart. But each one informs the other, right? And so there isn't one that I look at over another. You get more detail in like a 5-minute or a 1-minute, but you can see the larger picture on a 78 130 daily. Does that kind of answer your question? I'm not yet. You're right. I'm not going to do a lesson on Thursday because the market's closed. Maybe what I'll do is I'll do it for when we're back on Friday. Tomorrow's going to be a little busy for me personally, so I don't want to. I didn't want to commit to doing a lesson on it tomorrow. But if I get it all pulled together, I will. But why don't we just plan on Friday? I'll do a theta lesson on Friday at this normal 11:30 time frame. Yeah, the market is closed on Thursday. That's my bad. So you see what's happening here, and if Trump wasn't talking, I mean even now, right? You see we're zooming into the last 2 days of this 5-minute chart, and we have a large VP level here, which you can see we've come down, we've bounced off of the value area low, we've come up and we've come above that VP level, and now we've retested it. Okay, this to me, if you like APP, is a good level in which to take a shot if you didn't take a shot down here, right? And the reason for that is as we get larger into this pattern, now you could say, okay, I like it here. I'm gonna play it up into resistance, right? So I'm gonna try and play it for this move. Obviously, it's not gonna move, exactly like that, but and then I'm gonna swap it out and then see if it comes back down and gives me another level, because you can see if you had purchased here and sold it here or shorted it here, and covered it here, this is the pattern that it's working within, and you can see it bouncing off these levels, right, that we've marked on our charts. So there are ways, once you identify these areas of consolidation, that you can play off the support and resistance or other areas within that, and you can make good money. I mean, this is a $350 stock, $325 stock. The moves you're going to get between each one of these levels is enough to take a couple $100 in profit, depending on how many contracts you're taking. And if you just rinse and repeat that process, then great. But if we're playing a true TPS pattern here, right, we're looking for targets that are way up here, or at least I am, at a break of that previous high, or at least a retest of that previous high. And then in addition to that, an extension above to this 1272, right? And you could even say, well, 450 is probably going to be a magical number there, a nice round number. So you could say, okay, my target number 2 would be, 450 with a trailer. Now, when we look at this pattern, we can say, all right, let's look at our risk reward profile. And if we're taking a trade here off of this point of control line, and we're risking down to our value area low, right? Anything below that, I think all of us can argue and understand that this pattern is a bust, right? Below 313.44. Does anybody disagree with that? No? Right? So a breakdown of this 320, 314 level, this pattern is broken. I mean, yes, it can wick through, but if we have a 130-minute candle that closes below that, this is broken, and it's broken all the way down, most likely to about here, right? And so I know a lot of people are taking some heat today because of the pull in the market. But if you look at a pattern like this and you say, okay, well, here, let me finish my risk reward first. So let's say we're taking a trade off of here. We're risking down to our value area low. And then we're shooting for, a touch of the next, the most recent high. You're looking at almost an 8.5 to 1 risk reward, which is a great risk reward. And if you had taken it even lower, your risk reward is significantly bigger than that, right? But if you look at it as, okay, well, I know the pattern breaks down here at 313, but, and you're going to take it right here, let's say, but I'm going to risk all the way down to, that next level and pray for a bounce. Now you've really drastically skewed your risk reward. And most likely, if you're not disciplined enough to take your, to stop out at 313, you're probably not disciplined enough to hold until you hit your profit target. So you're most likely risking down to 287 and taking profit at, this 340 level. So then you've just inverted your risk reward profile. Yeah, I am recording this. I'll post this up, after we're done here. But so then this pattern in itself at these levels is great risk reward, right? And you hear me say this, those of you who've been in this room a lot, you hear me say this time and time and time again. This risk reward tool only works if you follow your plan, right? And you learn where your levels are. And then once you put your trade on, you follow that plan. Because if you don't follow that plan, this little green and red box is just a green and red box. You know what I mean? It's like, it's just something pretty on your chart and it doesn't mean jack squat because, you've let probably a 78-minute candle close down here, and then you're watching another one close down here, and then you're 50% underwater, and you're upset that, the trade didn't work out, but you're still holding it down here and down here when the true area in which this pattern breaks down is right down here. And that's where most people get into trouble. Most retail traders get into trouble when there's two ways that most retail traders, that's all of us, that get in trouble is they take a trade right here, let's say, on APP, and they do not have a plan. They don't know where their levels are. And so when the trade is down here, they're like, oh, what should we do? Is it still good? Should we add? Should we cut it? I don't know. Well, why don't you know? Well, because I don't have a plan. That's not what beginners will say. They don't understand that they need a plan, right? But us as teachers will say, what was your plan? And the plan was, well, my plan was to buy APP and watch it go up. Okay, great. That's a quarter of a plan. Where's your risk reward? Where's your level in which this pattern is now broken? Where are your profit targets? Where are your intermediary, bounce and support levels? There's a lot that goes into making a plan. And then the other part of it is, once you learn to make a plan and understand where your levels are, the other mistake that a lot of people make, most people make, is not following your plan. Right? So you can come in and say, all right, well, I know what I have here. I know what my risk is. I know how many contracts I can buy based on my total risk parameters. But we wake up in the morning, I don't know, tomorrow, Friday, whatever, and APP is down here. Okay, that's fine. Then it's time to cut that trade, right? There's professional traders or people that do this for a living that could make an argument for, okay, it's gapped down on me. I'm going to see if I can trade out of this. Trade out of this means, I'm going to try and add here and get at least a bounce back up into this previous support level, which is now resistance, and then take it off and try and trade out of it so it's not a big loss. But you have to earn that right, in my opinion. If you wake up in the morning and this thing is below your stop level, I always want to kind of give it a minute or two because it could just be a wick down, a morning wick down. But if it continues to start to roll, it's time to just cut it. Today, for instance, on that line, I tried to bounce this pull in the SPX at two different places. Okay, so we got this pull. I did not anticipate the rollover, so I did not have puts on, right? But I tried it in two separate places, and it didn't give me the bounce I was looking for. And I stopped out for very small losses. And that's fine because the one I did catch was this one, right? And I'm doing a small account challenge, which I'll talk to you about in a little bit. So it's two contracts on the SPY. So I tried it. I believe I tried it. I tried it here for like a $36 loss, and I tried it here for like a $40 loss, and then I hit it here on the breakdown, the breakdown of this level and push, and it was, I made $250, right? And it's just a small account, but if you ramp that up onto something larger or 10 contracts or whatever, these little losses, while they suck, you're taking shots but managing risk until you get what you thought was going to happen, and you make 5 to 10 times what these little losses were, right? And so on APP, even on a larger, that's day trading. Even on APP, if let's say this breaks down, you can cut it, and then if it reclaims, you can try again, right? And then watch it move up and take some profit, and then maybe if it comes back down into here, you try again. Okay, it doesn't work, you might cut for a small loss, wait for it to set up again, try it again, right? And then your wins have to be larger than your losses. And that's by understanding what your risk is by using a tool like this, right? And reward, and then being able to have the patience and or the discipline to follow those rules. And then if you find out that you're stopping out of too many things, then you need to revise your trade plans. But, one thing you'll hear us say in this room is don't revise your trade plan after you're already in the trade. That is where people get into the most trouble. Rick, I have them set at 15% stop loss. when I'm using, kind of my OCO order type. Yeah, yeah, David. So for instance, let's see. If I mean, we can talk in hypotheticals here. I can't think off the top of my head of a good example of this, right? But let me get rid of this. So if we're trading APP, we'll stay on this APP trade, right? If you were on this APP trade and we get a breakdown of this pattern, so let's say today this thing breaks down, right? And maybe it even comes down into here, right? Let's say it just kind of works its way down here. It bounces here and works its way back up into this level. So the example that I showed a few minutes ago, if you've been kind of listening to this whole presentation, was if professional traders or traders that have been trading for a long time, if they're playing this pattern and it breaks down, they can trade out of it, right? And retail traders do this too, sometimes a little bit too much. Well, obviously too much because most retail traders are not successful. Is they might try to add here, and then if it broke down and you initiated your trade here and you added here, when it comes back into this breakdown level, right? What are most traders going to decide to do, right? They're down 50%, they've maybe added a little bit here, but not doubled their position because they're living or they're trading fearful right now. They're down 50%. They add a little bit in hopes it gets back down to here. What's the psychology of that trader gonna do? Yeah, they're going to sell their position for most likely break even or slightly positive and be like, "Oh my God, I'm so glad I'm out of that trade." I was down so much, and then it got me back. It got me back here, and okay, I'm gonna cut this one and move on, or I'm gonna take the little bit of profit that I'm in, and man, am I a great trader because I saved that trade, right? Well, that's two things. One, in my opinion, no, you're not. You got lucky that it bounced here and didn't do that, right? And if you're playing a level, I mean, if you know your levels, then it's not luck. But most beginning traders, that would be a lucky move. And then they think they're a good trader now because they've saved this trade, and now they're feeling cocky, and their risk parameters are skewed and they're taking riskier trades. But to the point I was making prior is, if that's what the psychology of most people will do when a very clear pattern like this breaks down, then where's a good place to short this pattern once it breaks down? Right here, right? So if this pattern breaks down, and maybe you're quick enough and a day trader enough or a small swing trader enough to count this small bounce and catch a piece of it. But here is where if the pattern is breaking down fully, this is where it's going to roll again and roll harder potentially, right? And we don't know any of this ahead of time. This is just a good place to have a good risk reward, because if it breaks back up into the pattern, you cut it, but if it rolls, you capture that move, right? So when a pattern breaks down, yes, you can short it. Usually the best place to try is on a retest of the breakdown area, right? Conversely, if this were to break down and reclaim the pattern, then the place to take a shot at a long is that previous resistance, that spot where it broke down, right? Because it's very bullish when you reclaim a pattern. So there's a retest that this happens both up and down, right? We break down, it retests that level, and then if it doesn't reclaim the pattern, it's going to roll, right? Or could potentially roll. But if it breaks back up into the pattern, another good risk reward spot for a long is as it comes back into that previous, what was support, then should be resistance, then becomes support again. Does that make sense? The market's not closed on Friday, just on Thursday. Kirk. Friday it will be open. Now, if you have Thursday expiring options, I had an email from my broker that said that there'd be some grace to Thursday expiring options if you're using, you're on a 0 DTE type of option situation, like a ETF or the SPY, the Qs, something like that. But yeah, your options will expire on the Friday still. Right. But your options are also going to get that full theta decay all through Thursday. And the underlying is not going to go anywhere. So that is kind of an issue. Okay, so did I kind of answer everyone's question? We kind of went from looking for a trade plan, or looking for a trade possibility to set up a trade plan, to talking about psychology and honoring your trade plan. And so getting good at setting up your proper trade plan, in my opinion, and I'm just one guy here, in my opinion, is one of the most important things you can learn. And then the second most important thing, I would probably put it first, but chronologically, you have to learn how to make a trade plan first, right? But then the harder part, the part that most people struggle with, because learning to make a trade plan is relatively easy. There's plenty of examples. It's all you kind of have to do is study and figure out what edge you're using and how to set up a trade plan for that. That part is relatively easy, and most people can get that. The part that most people have trouble with, and will continue to have trouble with until you can turn your brain, your emotions off, like Donnie can, D-Man, is, can you follow your trade plan? That's the key. Yeah, you can't. You can trade the microseconds. I never go below a 1 minute. So, does anybody have? Let me see what we might have to set up a trade plan on. Because now that we've talked about the psychology of it and making sure you're always setting up a trade plan, it's an interesting spot to bounce the SPY, maybe. Oh, that's an interesting level. I'm interested to see what the SPY does here. It could, well, it's not really putting in a double bottom, but almost, right? It could do it. It might come back up into this 591.81 level, and if things continue to stay weak, it could. I mean, look at these higher, lower high, lower high, lower high, lower high, lower high, lower high, lower high. Right? That is a descending triangle pattern that's setting up. And let me redraw that so you can see this. So here's what I'd be watching for, right? Let me, if we're looking at the indices, right? We've got this, you know, it's sort of a crude drawing here, but we've got this descending lower high situation, and then we're kind of setting up a flat bottom here with a small breakdown and reclaim. But when we talk about these, right, we go 1, 2, and then potentially 3, right? We set up that sort of inverted cup and handle within this pattern. It'd be interesting to watch. I mean, this very well could be more of a double bottom. I mean, you know, kind of a weird W pattern, and we might break up above that. But it'll be interesting to watch. If the market continues to stay weak, we might see that kind of a pattern. That's my dog. Can you hear my dog? Is Google back to a buy level? Let's see. Well, there's a pretty key level right there. Let me see. I mean, I would say you're coming into Google is coming into an area where a risk reward for a bounce is if like so if you think, and this is sort of what makes a market, right? If you think Google is going to bounce, right, then you can say, you know, okay, well, I'm gonna risk down to these lows. And this is this support area that has been setting up, you know, with a bounce back up into VWAP, and you're looking at, you know, a little over a 5-to-1 risk reward on that. But I can't say that it's at a buy level because I don't know what edge you're trying to play, right? Are you looking at it on a daily? Are you looking at it on a 1 minute? What type of play are you looking to make, right? If the overall market is going to roll, I'm not saying it is. I'm if it's going to roll, is Google going to go with it? Most likely. So, is it at a good risk reward spot for a certain type of trade? Yeah, I think so. But again, you know, you would need to be able to honor your trade plan. And then what is the trade plan? So for me, if you said you've got to trade, you've got to trade Google right now. You have no other choice. I would say, okay, well, I'll take a lotto for this week, and I'll risk down to 195.50, and I'm looking for a bounce, back up into the VWAP area. I'd probably, measure, I'd probably measure this bounce here, down to here, look for something similar, so maybe something up into 197.73 or something like that, with a small risk there. So if I did my little risk reward tool and I took that a little earlier when the bounce started, you're at a 4-to-1 risk reward, right? So does that make sense when I say, I don't know, Teely? It depends on what type of player you're wanting to make. Amazon. Amazon to me looks less like a candidate for a good risk reward play right now. Also depends on what where's the thing I'm looking for my other tool. I think it's right here, right? Nope. Yep. Got this big chunk of VP right here, right? So if you were listening to the presentation earlier, right, we've broken down below that VP level and we've come up and retested it, right, and then rolled from it. So I don't. To me, this looks on a shorter term time frame intraday like it wants to continue to push a little bit lower. That's just the way it looks to me. So I don't see a good risk reward level in which to, where I would feel like, okay, I mean, so again, if you put a gun to my head, so to speak, that was a phrase. I think I picked that phrase up from Nate Bear. I would say if I had to do something with Amazon right now, I mean, I'd prefer to just stay away from it personally, but I might even say, okay, well, I'm gonna take a shot for, gap close, and I'm gonna risk, up to the value area high up there, or even the point of control here. That's more risk that I'm willing to take at the level it's at right now. But I might try to short it right now. But to me, it's just a no trade. There's nothing to do in it right now. It's not at a level that I like. Lucky, I never planned to go to zero with a lotto play, but it certainly, that's the definition of the lotto play, right? So the lotto play is, I'm going to take and we do use the lotto phrasing somewhat liberally, in the sense it generally means, we're going out this week's options. We might even be going a little bit out of the money So we're not putting as much money at risk. And if it does happen to go right away, the amount of money you're putting at risk, the reward is higher. Just because it's a lot easier to make 100% on a a $80 option, and I mean like an $8 an 80-cent option, so that you're paying $80, than a much higher cost option. But the concept behind the lotto is don't risk more than you're willing to lose. So if all of a sudden it doesn't go your way, like in terms of an overnight type of situation, you're willing to lose whatever you put into the trade. That's generally the kind of the lotto idea. Yeah, zero to hero, right? But I play lottos all the time under the zero DTE definition, and I stop out as soon as it's broken the level that I'm playing off of. So I prefer them not to go to zero, but you know sometimes that's part of playing it. Joe, we're not considering any option right now. I'm just talking through trade plans and possible. People are asking me about uh, different charts and what I think. Cal H, yeah, I would talk to the mods about that. I have no idea. Would I look at calm or would I try and stay calm? Okay, so in looking at calm, what do you want me to look at in calm? Like, what are you thinking? Oh, let me cover. Derek said something and I didn't see it. Derek, on APP, the APP is not my trade. It's Nate Bear's trade. I am not in it currently. I'm kind of watching it set up for today, but we're playing this pattern here, or Nate is playing this pattern here in APP, right? And he's out. I think he showed me yesterday. I think he's out till to February, right? On one of those options. This pattern, it has not broken down. Okay, the 313.48 level to me is the breakdown level. So it has pulled today, and if anyone was buying up in here, they're certainly taking heat, right? But this is the support level for this pattern, and we've bounced off of it, at least for right now. So APP is holding, and if for instance, if you look at a pattern like this, and you want to get involved, but you're getting involved somewhere near the top of the pattern, before hoping for a breakout. My recommendation usually is take size that is manageable, right? Understand that you're playing a 350 or nearly $350 stock. And so if it drifts back into the lower range of the pattern, that is a $35 move on the underlying. it's going to affect your option pricing pretty drastically. With the idea that, maybe you're taking a half position here, and if it comes into the support level and bounces, maybe this is a good place to add. But this overall pattern is not broken. In fact, it is still very well intact. And I'm looking at taking a position maybe sometime before the close off of the levels in here. So my risk to reward is really good, because if it breaks this 314, I would be out of it. Now, this is not my trade, so I don't want to speak for Nate, but that's how I would be trading this. Does that make sense? Yeah, Lucky. I'm waiting to, I want bond auction to go through. I want Trump to be done speaking. I want to see what the market is going to do. We're kind of holding this, this low area for now. Um, but yeah, I'm not quite ready to put my money at risk. But as you'll find, as you hear all of us talk, I tend to probably be the most cautious of or the conservative, I guess. Cautious isn't the right word, because you still have to take chances, take shots. Would those of you that have been in here for a long time, would you say that that's true? I tend to be the most cautious of the or conservative of the three of us. I'm not saying that's a good thing or a bad thing. I'm just I'm just stating that as uh, that's probably the case. There is something to say for taking more shots and being more aggressive. I think D-Man's probably the most aggressive, but he's also a guy who honors his trade plans to a T and will cut a trade when it's not working, like it never happened. I've never even seen. I, I've never seen anything like it. It's pretty crazy. So while I'm saying I'm probably of the three of us the most conservative, trading wise, that doesn't mean it's a good thing. It just means, when you hear me talk about things, that's usually the perspective I'm coming from. Yeah, and when they pay off, when those chances pay off, they're massive and they're great. And I can't tell you how many times I've decided not to take a trade because I just didn't think the risk was worth it, or whatever. And Nader D Man's hitting a 1,000 percenter, and I'm like, dang it, I should I should. Oh, thank you. Uh, I should have taken that, but you can't live through FOMO. I've learned that over many years of trading with these guys. You got to do your thing. So, and you can't worry about what other people are doing. Oh, Matt, I haven't been reading. What stuff is he bumping? Look at that little Google bounce. Did anybody take that as I was talking about a possible idea? Nice. Nice little popper, especially if you did some zero. Well, there are no zero TTEs, but this week's this week's DTEs. Nice. And those are just the little quick hits that add up. Like I was talking about my sort of small account challenge, which I'll talk about here on another day. Is just taking quick hits on zero DTE, SPY, or SPX trades. And then as that small account grows, then you start to add size a little bit. Yeah, Miller time. That's exactly right. Like there are times where I've wished I was in a trade because it didn't sit quite right with my eye or my risk tolerance or whatever for that day, and later that day or the next morning or 2 days later, Nate or D-Man or someone is taking 500% or 120%, and I'm like, dang it, I really should have taken that. And then there's also the other ones where I'm like, that doesn't fit with my eye, and that trade, it doesn't work. But I've also taken trade. It's just about taking shots and managing risk. That is trading, because none of us know what the market is going to do. We just have to look for setups that provide us good risk reward parameters, and that have a high potential for going the direction we want to, and we take shots. And if they don't work, they don't work, and if they work, we're happy, but we can't get emotional about it. That's trading. And no trader is going to be able to sit there and throw in every idea that they have and have it every single one be a winner. It's just not possible. Steve. All right, y'all. That's it for me. I'm gonna jump off of it unless anybody has any sort of last minute questions. If anybody wants to rewatch this, I'll post it. I'll put it up on YouTube with the rest of the videos from the last, I don't know, 2 years. I'm gonna try and do a little bit better job of putting something up there every day this year. That's one of my, I don't do New Year's resolutions, but my goals for this year. Let's call it that. Oh, you'd like to share? Do you want this chart with APP marked up like this? Yeah, I can do that. Hold on a second. You have to, once you open that link, you then have to save it as, I have this named as TTM VP chart. So you can open it, but make sure that you then go, if you want to keep it, go File, Save, and then name it something that you can pick from later. Yeah, that does the exclamation point go first? Let's see. I can't remember now. Yes, there's the link to where I post all these. And I'm working on finding some outro music too, because the intro music is fun, but I haven't found any good outro music. Maybe that's another a goal for 2025. Find some outro. All right, I will talk to you all later. I'm going to put Nate's screen back up, but I know he's out for the day, but I think D-Man is coming on later. Probably for the close is my guess. MMK, I think it's at a pretty nice level right now. My risk would be down to 314. I'm just waiting to see personally, I'm waiting to see what sets up in the market for the remainder of the day. But this sort of, I've got to learn where my tools are. This sort of area right here, I think is a good, kind of all the way up into this first point, this first VP level, is a good spot to take a shot on APP. That's my opinion on it. So we're in that area. Okay, I will talk to you all later.